Hey y'all, just real value here. Today, we're going to talk about the collapse of Silicon Valley Bank. We'll be discussing the events that leading up to the collapse, the impact on the tech startup community, the potential implications for the broader economy, and how you can protect yourself and even profit from this catastrophe. So please hit the like and subscribe and share this content, and let's get started. A little bit about Silicon Valley Bank. Did you know that it was founded over 40 years ago over a poker game? Think about that for a moment. That just helps you to appreciate the individuals that put this bank together and the risk that they're willing to take. So Silicon Valley Bank became the go-to lender for tech startups that appeared too risky in the eyes of larger, more traditional banks. So Silicon Valley Bank, it was established to provide credit and banking services to Silicon Valley's growing number of startup technology companies. Think about that. Silicon Valley is where all these tech startups started. We have Apple, Microsoft, the tech boom really happened in that area, that location. So eventually, Silicon Valley Bank would be known as the company or the bank that would be able to handle all of these tech companies, startups, their services, and their banking. If you were a high growth startup, you might not be able to get credit at your other vendors or your other banking institutions. But for Silicon Valley Bank, it wasn't an issue. They would give you this credit. They would give you this banking so that you can have and establish your business. So what happened? What was the problem? Well, on Friday, March 10th, Silicon Valley Bank collapsed and it was taken over by the FDIC. Out of existence. The collapse crashed suddenly, and just think about that. In about 48 hours after its long established customer base of tech startups, they began to withdraw deposits. Pretty much a bank run on all of those deposits. The bank had been facing interest rate risks on $91 billion, and basically it had to do a fire sale of $21 billion. So they started losing these deposits. They had a loss of over almost $2 billion. That's what happened. Silicon Valley Bank collapsed, and it sparked concerns about the possibility of a broader financial contagion and led to share losses across the banking sector. The chart behind me is actually Silicon Valley Bank. As you can see, it completely cratered and collapsed. The collapse of Silicon Valley Bank is being described as the second largest banking collapse since the 2008 financial crisis. Think about that for a moment. 2008 financial crisis, we know what happened with Lehman Brothers. The entire banking system went down. Here, it's the second largest. Are we in for it again? Well, we'll compare that later on today. While experts suggest that the collapse could lead to contagion among regional banks, it's not being seen as a systematic risk to the entire financial system at this point. Reports suggest that the bank faced a sudden bank run and capital crisis leading to its collapse. Deposit withdrawals amounted to over $42 billion by the end of the day on Thursday alone, setting up, as we mentioned, the second largest bank failure in U.S. history. It's unclear how much of these deposits were above the $250,000 insurance limit from the FDIC. But overall, the collapse of Silicon Valley Bank has raised concerns about the possibility of a broader financial contagion. So let's talk about some of these things. Let's talk about the impact on tech startups. Well, SVB had been a trusted partner, as we mentioned, to the venture capital industry and the startup community for over 40 years. So some experts warn that the failure could wipe out a whole generation of startups. SVB was known for providing banking services to these early stage technology companies and venture capitalists. Think about it. If you're a tech startup, you need money to start your business, maybe for payroll or to acquire equipment or technologies. Where are you going to go? SVB. Now, if SVB is not there, guess what? These companies can't pay payroll, they can't buy technologies, these startups start to go down, out of business, people losing their jobs. This just started in the last 2 days. Yes, this could have a ripple effect on the entire tech industry, as startups often rely on funding from venture capitalists and angel investors, who in turn rely on banks like SVB to provide loans and other financial services. The FDIC has said that depositors will be able to access only up to $250,000 of their funds by Monday morning, 2 days. But any amount above that will result in a receivership certificate. They may not be able to get that money back. There's an article, I'll leave it in the comments below. It's called Silicon Valley Bank Failure Could Wipe Out a Whole Generation of Startups. It's interesting. It talked about a bunch of different companies and even incubators that help create these startups. One person said, "Founders are texting me and saying they don't know how to make payroll next week. This just happened yesterday. Will they have to take out personal loans to keep the business running? Do they have to furlough workers, which would put them that they don't get paid for a week or two or a month? This can be an existential risk to competition and innovation in the American economy for the next decade." That's what he said. Silicon Valley bank failures comes amid challenging time for startups. Yes, it's very, very difficult. Think about that. Some estimates that those deposits that were in excess of $250,000 was potentially 97%. So all the other creditors, debitors, the people that had money there, could be all gone. One particular company, Shelf Engine, he mentioned that he just paid his employees Friday, but he doesn't know where the next paycheck is going to come from. It's interesting that he is a 40-person startup that he started in 2015, and with that, he had $60 million from investors. We don't know how much of those millions were tied up in SVB. If they were, he may only be entitled to $250,000 of it. For tech startups, which for decades have relied heavily on the banks to fund their work and their innovation, we might see a lot of layoffs, hundreds of startups collapsing, and things are just going to get bad, especially in this sector. We don't know if the government's going to help, if the government's going to step in. If not, this whole generation of startups could be wiped off the planet. Very difficult times, especially for that area of the sector. But let's talk about implications for the broader economy. Think about this. The collapse of Silicon Valley Bank could have wider implications for the economy. The Bank of London, another country away, is reportedly exploring the possibility of assembling an offer for SVB UK as a startup. Founders warn that its collapse will cripple the British tech sector. Think about that. This one bank could potentially cripple the British tech sector. Additionally, the losses incurred by the bank could create a contagion effect, leading to job losses and further economic disruptions in their country. What about it for the everyday people, you and I? Well, the collapse of Silicon Valley Bank may have an impact on us, who had specifically those who had accounts with the bank. If you had an account with SVB, hopefully it was less than $250,000, because that's what the FDIC will insure up to. Otherwise, you may have issues. Startups that banked with SVB may experience payroll problems due to the bank's collapse. And this collapse of SVB also reveals the stresses created by the fastest jump in borrowing costs in decades, which may have further unintended consequences. So for a moment, I'd like you to just think about the comparisons between the 2008 financial crisis with Lehman Brothers, the banking sector there, and SVB. We're going to discuss the two. So the similarities and differences between the 2008 collapse and the recent collapse of SVB is this. Now you may think about it. Both events caused significant financial damage and have had long-lasting impacts on the economy. So let's dive into those details. In 2008, the financial crisis was triggered by a collapse in the housing market and the subprime mortgages. Banks invested heavily in these risky mortgages, and when they started to default, we know that the entire financial system was put at risk. This resulted in a wave of bank failures, government bailouts, and a widespread economic downturn happened for a few years as we lived through that. Similarly, on the other side, the collapse of Silicon Valley Bank was caused by years of those poker players, of risky investment practices, and inadequate risk management. The bank invested heavily in long-dated securities, which it sold at a loss of about $1.8 billion. And in addition, the bank struggled to grow its loan book fast enough to generate the yield it needed so that there wasn't a mass exodus of its deposits. The impact. In 2008, the financial crisis had a massive impact on the entire global economy, with millions losing their homes, jobs, and savings. Governments around the world were forced to step in with massive bailout packages to stabilize the financial system and prevent a complete economic collapse. In comparison, the collapse of Silicon Valley Bank has primarily affected the tech startup ecosystem as of now. The bank was a significant player in the innovation economy, and its liquidity crisis sent shockwaves throughout the industry, even into crypto. Many startups have had to pull their funds from SVB Bank, and the crisis has highlighted the widespread financial stress weighing on startups for now. What was the government's response? Back in 2008, governments around the world implemented various regulatory measures to prevent such an event from happening again. Right? They imposed stricter regulations on financial institutions and increased transparency and accountability within companies. But in contrast today, the government's response to the Silicon Valley Bank collapse at this point has been relatively muted. The bank was not considered to be systematically an important financial institution, and its failure is unlikely to have a significant impact on the broader economy. That's how the government is dealing with it at this point. So in conclusion, think about this. In summary, while both the 2008 financial crisis and the collapse of Silicon Valley Bank were triggered by risky investment practices, the impact and the government response to each event had been very different. The 2008 financial crisis had far-reaching consequences, while the collapse of Silicon Valley Bank has primarily affected the tech startup ecosystem. But nonetheless, the crisis has highlighted the need for robust risk management practices and regulatory oversight in the financial sector. So with all that information, all that data, what can we learn from all this? What is our plan? Well, number one, have some cash on hand. Come Monday, there might be some bank runs, but you should take out some money to have on cash for these emergencies. Number two, diversify your banking relationships. See, instead of relying on one bank, if your bank was SVB, right, split it up into multiple banks, especially if you have additional money, more than $250,000. You should have it in multiple banks so that $1 million you can split up into 4 different banks, all being FDIC insured. As well as if you lose access to one of your banks, you still have access to the others. Keep track of your deposits so that you don't go over that $250,000 limit. Monitor news and announcements. Think about that for a moment. You're in a partnership with these banks. You're giving them or lending them your money. You want to be informed of any special changes or any type of issues that they might be facing so that you can make your informed decisions whether you keep your money there or not. Number 5, understand your options in a crisis. Yes, what are your options if something like this occurs? How to get in touch with FDIC? How can you take your money out? Are there any fees or restrictions that might be imposed upon you? Number 6, consider using credit instead of debit. Especially during a crisis, you might want to hold on to that cash. So use a credit card so that you can free up that cash for other things just because of an emergency. But of course, pay off the balance each month to avoid having any interest charges. Number 7, maintain good credit. Have a good credit available to you so that if there was an emergency, you have some sort of an equity line or something that you could access at any point in time for these emergency needs. And number 8, seek professional advice. Of course, reach out to a tax financial planner, a tax consultant, an accountant to see what your best course of action might be. Some other ways to protect yourself would be to generate multiple streams of income, such as a side hustle or learning a new skill to have other ways of income coming into you. You see, right now the economy is not stable at the moment. It can change at any time, as it did during 2008. But there are always opportunities. Another thing you could do is subscribe to this channel, because we're going to consider some of those opportunities in the future. How now can we profit from such an event? Well, for now, the banking sector may be in turmoil until this all works out itself. But it's interesting that during the 2008 financial crisis, just think of one large bank today, Bank of America. Its stock went from a high of $53 a share to just under $4 in 2 years. So don't think for one moment that a particular company cannot go lower when it can, and it will. Or what about those companies that have their banks' accounts seized on Silicon Valley Bank at this time, such as Roku and others? Right now, I would stay clear away from them at this time. And if you're an experienced investor, you may find ways to short the market until these events ripple through the economy. Just think of that chart behind me. That is Silver Valley Bank. If you would have short that, you would have made a heck of a lot of money. So there might be ways to make money in this economy. In conclusion, though, the collapse of Silicon Valley Bank has sent shockwaves throughout the tech startup community and raised concerns about the broader economy. While the FDIC has taken steps to protect depositors, the long-term impact of the collapse, it remains to be seen. So keep focused on what you can do and not what is out of your control. Take one step at a time. Thanks for watching Just Real Value on the Silicon Valley Bank collapse.